This is redefining your retirement. Let's get you and your retirement on the money with financial advisor Ryan Wheelis. I am Spike Spangle. Thank you for joining us on the YouTube and on all of your radio channels. We're having a great conversation today, even about alternative investments, and are alternatives too scary or risky for thinking about retirement planning. I believe the administration, the president, has opened up the doors to having some of these alternatives now into our retirement accounts. What does that mean? First of all, let's start with that. Is that a fact yet? Has the president opened, are we allowed to use, I think we were talking about private equity placements and the possibility of 401ks and even cryptos now.
Yeah, President Trump signed an executive order that lays the groundwork to add alternative assets such as private equity, private credit, cryptocurrencies, and private real estate funds.
Good or bad? I mean, what do we think?
Well, I mean, it basically, the order directs the U.S. Secretary of Labor to review fiduciary guidance on private market investments in the 401k and other defined contribution plans like 401as, 403bs. And those are all plans that are governed by the Employment Retirement Income Security Act of 1974, also known as ERISA. And so the federal law sets minimum standards for most retirement plans on what they can do, care and that sort of thing. And it really is interesting, Spike, because, I first got in this business late 06, before the 08 financial crisis. When somebody would bring in their 401k statements, I would look at the number of options they had on their 401k plan to invest in. I mean, you would see sometimes 200 or 300 funds. A lot. All right. And then after 08, people lost so much money that the companies that were providing these plans were like, wait a minute, we don't want, again, this is why pensions went away in 78, by the way, started going away in 78 when the 401k plan was added to the Internal Revenue Code. But they didn't want the onus of an employee working there for 30 or 40 years and not being able to retire placed on them being the employer. So some people were day trading their 401ks. Some people were, doing a lot of ins and outs and that sort of thing. And so they said, hey, here's what we're going to do. We're going to water these plans down in a big way. We're going to give you some target date funds, and we're going to give you about maybe 10 index funds. And that's it. That's what your choices are. And hey, there's nothing wrong with index funds. Mm-hmm. I mean, I can tell you right now, the market from 1929 to present day has gone higher. No question about it.
Yep.
Okay. And so, the markets do go up over a longer time period. For sure, for somebody saving for retirement, that is a longer time period, right? But the question becomes, is that enough, right? And President Trump is saying he doesn't believe it is. And if the private equity, private credit, and even cryptocurrency space is a viable asset class, which they all are at this point, shouldn't people be allowed to invest their largest asset for most folks, a 401k, the dollars in a 401k? Shouldn't they be allowed access to these types of programs?
Mm-hmm. Okay.
And quite frankly, I think they should. I can show you private equity funds up against any mutual fund available in a 401k plan.
Over long periods of time. And
yeah, the drawdown on some of these private equity funds is very low compared to the drawdown on the S&P 500 index fund, way lower, right? So I think it's a viable space, but here's the challenge. And I think that's why we kind of got off on a tangent on this on the show today, and I'm glad we did.
Thrown away all my research. I spent 3 hours this morning putting together our weekend stuff, and I'm like, forget it. This is too interesting.
Well, I just think that's why it's so important that people get educated on this stuff and understand this stuff. And like I see competitors, right? Because a client will call in or a prospect will call in to the show, see the TV show, YouTube channel, kind of one of our workshops we teach at local community colleges and community centers, and they'll bring their stuff in, and I'll see what's on their statements. And there's only one or two shops in town that have private credit or private equity in place in a client's portfolio. And a lot of times they'll say, that's pretty good stuff there, right?
Mm-hmm.
That's maybe 2 out of 10 people that come in the door, maybe 2. Right?
Is that some of our big oil and gas players, a little more sophistication?
No, it's not. And so what's interesting to me, the net worth tends to be higher of the person coming in the door, but it just tells me that one or two things aren't happening. Either the general public is not educated enough on private equity, private credit, private real estate, crypto, and structured notes, because we don't see a lot of that stuff coming in the door, but it's an incredible opportunity for a portion of your savings to be in to potentially increase your returns dramatically, increase income from your investments dramatically, and substantially lower your risk, potentially. Mm-hmm. It's there. And I think with the executive order that President Trump signed, along with the lack of the stuff that we see on the statements come in the door from prospects that call the shows, right? It tells me that either advisors don't know what they're doing with the stuff, or they're just not educated about it, or also and clients don't know. Because if I knew of some things, if I knew the things that I know, and I was a client out there trying to find a financial advisor to work with, I absolutely want to make sure that my advisor offered private credit, private equity, crypto, and also in the form of an ETF, and also structured notes, and was versed in that stuff in a big way. Because for a portion of my money, with what I know, I would want some there.
You just kicked open the door for me, so I'm going to follow you through there. I'm going to turn the light switch on real quick. You just mentioned cryptos and probably an ETF or a fund of some version, but this executive order also saying we want to open up the opportunities for those inside retirement accounts. Again, you know me, I'm more the sociologist on it. I like to kind of step back and go, why? It seemed like there was a correction from 2008, properly so, about, hey, let's not let people get too risky on their own retirement accounts. Seems like the pendulum is swaying back to like, hey, let's let Americans choose on their own. I mean, I think having crypto inside retirement accounts might actually get 20 and 30-year-olds a little bit more excited, because I don't know that they want to invest in their grandpa's Oldsmobile. I don't even know if they know what an Oldsmobile is. Do you think that's a good thing, though, a healthy thing, though, for 30, even 40-year-olds to be? How do you feel about crypto in a retirement account?
I think that anything out there that can get a 20-year-old or 30-year-old really focused on saving money now instead of waiting until they're 50 and it becoming a reactionary thing instead of a proactive thing is awesome and needs to be done in a big way.
Okay.
If that's what it takes to get somebody going, then that's what it takes. But guys, keep in mind here, I'm not sitting here on this radio show advocating you go put every dollar you have in crypto, or every dollar you have in structured notes, or every dollar you have in private credit, or every dollar you have in private equity, or every dollar you have in private real estate. I'm not advocating that in any capacity whatsoever. What I am saying is, for a portion of your assets, it can make a lot of sense as an overall balanced portfolio. And balance doesn't mean just balance in the sense of 50% stocks and 50% bonds. Balance means we've surveyed the land of all the choices out there available to us, and we've crafted a portfolio designed around your needs, your goals, your hurdle rate, the growth rate you need, the risk you're willing to take, and we've used all these asset classes to do it. That to me is a balanced portfolio, right? So you got to balance things out in a big way. And I'm by not all means not saying don't have money in the stock market, because you should have some money in the stock market, right? But there's just a lot more stuff out there available to us today. And I think what's happening, Spike, is there's a retirement crisis in America because we're wildly underfunded in retirement. So if we can get better returns with less risk in portfolios, and I'm excluding crypto from that, by the way, then I think it's a good thing. I do think crypto is a viable asset. I think it's here to stay. It's not going anywhere. Rick Edelman's a big talker on that. We've had a lot of conversations about that. I do think that cryptocurrencies are more viable dollar-wise in terms of dollars in the future than they are today. And I think it's a viable asset class. And if people can access some of that in their 401k, where they may not be able to anywhere else because they don't have any money outside of a 401k, I think they should be allowed to do it. Now, there probably needs to be some type of curbs of how much. That you can do. And I don't know how that's out of my wheelhouse. I'm not going to be part of those regulations, but I think there should be some type of a 20% maybe is the max or whatever it is, because the worst thing that can happen is somebody takes a big hit in crypto and panics and sells, and then never gets back in the markets and loses a bunch of money. Yeah.
As we've said, things over time. And although, as we're calling it, redefining your retirement, talking about some of the more exciting kind of different alternative investments, but you've got to make sure that for our listeners, for the viewers on the videos and so forth, that you're in the right risk for where you're at.
For sure.
I mean, a lot of this stuff, maybe.
Like you got to understand too that risk is dynamic.
Yes.
If the market's going up and you're making a ton of money and everything's good, you were more apt and more confident in taking more risk. But as soon as that portfolio takes a 20% haircut, that appetite for risk goes away real fast, and the desire for safety comes into play. Right. So a good portfolio design should speak to those things, because the markets are going to go up. I guarantee you that. I absolutely guarantee the market's going up. Guarantee it.
Yeah. And we're going to...
Hold on. I also guarantee the market's going to go sideways.
Yep.
I guarantee that, right? And I guarantee you the market's going to go down. That's all they can do. So a properly crafted portfolio should address all three of those market directions.
Folks, this is Redefining Retirement from the radio show here on The Money with your financial advisor, Ryan Wheelis. And we want to help you redefine your own retirement. Do you know what tools you are in right now, how much risk you are taking? As Ryan just said, your risk tolerance is probably dynamic. And the closer we are or even into retirement, we've got to make sure you've got the right tools for you today and today's economy. That's the other backdrop. It's that we can talk about philosophies of risk. We can study it. You can read about it. But what is actually happening along in today's real economy? Let's find out for yourself what you need to have for your home economy and your risk tolerance in your portfolio. Call 844-944-7555 to get started on your risk review and your actual written financial plan put together by our team of certified financial planners, or text us. We can get you started there as well. 21000. Type in the body of the text in there, the word plan. Hit send on that. We'll be in touch with you. One with Ryan Wheelis right after this.